So good morning and welcome to the BirdDog Technology Limited H1 FY 2022 investor webinar. BirdDog is a global video technology company that enhances the quality, speed, and flexibility of video through a range of solutions, augmented with NDI. To ask a question throughout today's presentation, please use the Q&A function at the bottom of the screen. So today I'm joined by Executive Director and CEO Dan Mile and CFO Barry Carlin to run you through today's results. So Dan, I will hand you over to the presentation.
Thanks very much, Jane, and thanks very much everyone for joining the call. I'm really excited to be talking to you. I'm actually over in Los Angeles at the moment. I've been spending the bulk of February over here visiting our customers and really getting a feel for what the industry is doing and what the people are looking at with our products and where things are going. So I'd like to talk in this presentation not only about what we've done in the first half, but also give a bit of a view into what's happening in the near term and also what the outlook looks like for our products and our customers' use for it. So we'll start off today just with a bit of a snapshot of where we're up to and what the first half results look like. Now, all of these graphs, if you've had a look at them before, if you've seen any of our presentations, we're keeping those same bits of information in there, and you'll see all of those bits of information are growing. So we now have more hardware products on sale, which hardware provides the bulk of our revenue at the moment. We are moving further into software as well. So you'll see there's more software that's been available. We've been busily releasing new innovations along the way in this first half. We're also on sale in over 100 countries. So we are a truly global company as far as where we sell our products and truly scalable as far as where our customers are using it. Moving forward from there, our unit sales are increasing steadily. We've sold more units now than we ever have before, and the demand for our products continues to improve and continues to grow. In terms of revenue, again, that's been growth in revenue. We booked in $24 million worth of revenue for the first half with an underlying EBITDA. As we move through this slide deck, Barry will talk more about the financial performance and what those growth figures mean and where they came from and some of the things that impacted that growth as well. Probably one of my favorite things on this slide is our customers that we have. And you'll see there's a huge amount of really tier one companies and logos there. In fact, during this trip, I've met up with a whole bunch of those and I've got some great feedback and some releases that will be coming out very soon that have some really meaningful impacts on where we're selling our products and who we're partnering with. So we might move to the next slide if we can, please, Barry. So in terms of highlights for the first half of the year, I think probably one of the major highlights is we listed the company, and that was very late in December, and that was a huge amount of work by the management team and everyone around us, and we're really proud to have successfully listed the company. During that time, we also still continue to grow as well. So we think that's a great result that we've managed to not only go through the process and the rigor of listing, but also continue to keep our eyes on the business and grow. Some of the major things that we achieved, though, which are really meaningful, not only for now, but also moving forward, are on this slide. So inventory build. This is something that's really topical and really important for any company, really. But we've significantly improved and built out our inventory holdings. That's to make sure we don't get caught up in short-term or medium-term supply chain issues. We've all seen that car factories have stopped operating or tried to buy something that's not on the shelf at the moment. We've really shored up our supply chain to make sure that doesn't happen with BirdDog products. We have all of our products in stock and they're available around the world at the moment. Now this creates not only a great thing as far as the business being sure of where we're heading, but it also creates growth opportunities as we're a company that will have products in stock where perhaps other people won't. We've accelerated our revenue in key markets, and this is really important. We'll dig into this a bit more later on. But in North America, which is effectively the home of television, we've seen a really significant growth on PCP. So compared to the last period, we've grown over 32%. This is really exciting, particularly with some of the conversations I've had in the last month while being over here. There's still a huge amount of room for growth with how we go about our current products and selling our current products, and then also with our new products that are coming on stream. So in terms of other things that have guided that growth, obviously COVID-19 continues to impact regions in different ways. Certainly with our company, we've had substantial absenteeism, and that's true for our customers as well. That creates some opportunities where people are designing hybrid workflows, but it also can slow down some decisions along the way. So it's a bit of a mixed bag in terms of COVID impacts. We've had some key hires, and this is something that's really helping us grow the business now and very much into the future. We're hiring we're hiring sales engineers globally. These people go out and talk to our customers directly and help them design systems and workflows. and also are the face that goes in front of all of our reseller channel to keep our product front of mind. They've been really successful, and we're expanding out that team of sales engineers. On the more engineering side of things, we have a bunch more software and hardware engineers that have joined the team. And this is part of our original use of funds statement, which is to expand the product delivery and reduce the time to market for our product roadmap. So we're really excited that we're expanding the team in many different places. In terms of partnerships, this is a really important part of our strategy as a business. We had a really good win with Newtech and the NDI license. They're the licensor of the underlying technology we use, and so we need to make sure that we have security within that agreement. We've managed to secure a 5-year ongoing agreement with them, with an option to extend for another 3. That really gives us a lot of confidence in how we build out our roadmap and how we bring our products to market, and the investment we're making in innovating our products as well. Over the course of this last month, I've met with some of the largest companies you would have heard of before, and we've got some great partnerships that are building up with those. And I'll talk a bit more about the outlook for that later on, but it really solidifies our plans, which is to partner up with large organizations and make sure we deliver globally scalable solutions. In terms of product launches, all of our products remain on a growth trajectory, and then adding new products adds additional growth to the business. So we've released products across all of our categories, that being software, cloud-based solutions, as well as AV and video production. So product launches were a real highlight in the last 6 months. In terms of commentary, I might hand over to you, Barry, to talk a little bit about the financials and the growth here.
Thanks, Dan. So we can see on the right-hand side we have tabulated the profit and loss. So we closed out the half, as Dan reported, at just south of 24 million Aussie. That was a growth on PCP for the half of 11.3%. And we realised that the 11.3% was different to the 28th of January 4C disclosure at 15%. There were 2 key factors around that. The first was that a shipment that left our warehouse in Hong Kong, our 3PL in Hong Kong, on the 29th of December, Wednesday, the 29th of December, physically left Hong Kong International Airport on Monday, the 3rd of January, which meant that significant shipment to the US was picked up in the review by the auditors and actually deferred into the current half that we exist in now. So that accounted for 2.5% of our growth. And then the other, then there was some FX in our translation where we need to translate that to spot rate at the end of the half for our financial instruments. So really we closed out the half with an Aussie 13.8% growth on PCP and a USD, and remembering that we invoice all of our customers in USD at a 15.1% PCP growth. That is 15.1%. Headline is 11.3 acknowledged, but in USD terms, absent that shipment to the US that left HKIA on Monday, the 3rd of January, just after New Year's Day, we're at 15.1% PCP in US dollars. In terms of the other highlights here, the gross margins are really stable at still in the mid-28s in terms of gross profit margins, and our EBITDA margin is reflective of our investment in the headcount. We added 10 operating people in the half to 31 December. That's 10, so we went from 18 to 28. And if we add our 3 non-executive directors that came on just prior to the listing, that's 31. We currently sit at 34 headcount, and in the next 10 days we'll be at 35. We're focused on investing both in our engineers that Dan talked about and our customer-facing people. So that's not only the sales engineers that Dan talked about, but also the key sales drivers in our key markets, North America and the EU, United Kingdom. The other nuance in terms of net profit after tax was a $1.96 million expense on the convertible note. That is not an interest, sorry, that has been classified as an interest expense, but that is not interest payable to the convertible note holders. We treated all of our convertible note holders equally, and there was no interest paid to anyone, but the $1.96 million expense recognises the discount that the convertible note holders received when they converted at the IPO. So the underlying interest that you'll see through the 4D announcement that we've released this morning is $135,000, which accounts for the USD $4.5 million facility that was drawn at 31 December at 3.68 million US and was fully repaid a month ago, physically on the 1st of February. So we're really pleased with the investment that we're making in our people, particularly our engineers that have grown from 5 to 9 engineers in the last 12 months. And we're certainly looking at adding that engineering headcount, as well as those customer-facing people that Dan has walked through. Dan, do you want to quickly talk about the key markets, one of which you're in right now, and then the EU, UK?
Absolutely, yeah. Absolutely. So as I mentioned earlier, I'm over here in the USA at the moment and have been since basically the start of February. It was really important for me to get over here and see people face to face. And it's been really exciting to see their reaction to what we've been up to and what we've got coming up as well. So it's been a really worthwhile trip. And again, we've got some more information coming up about that. In terms of what we've seen overall, you can see here there's a bit of a mixed bag in terms of what's happened with growth. In the USA, where I am here, we've seen a pretty significant growth of 31% on PCP. So there's some really great growth opportunities here. We attribute that to a couple of things. One of them is that we're seeing the uptake in the AV space start to pick up a little bit sooner here than it has in other regions, including Europe and the UK. AV is a new market that we're in, and we're starting to see some really great opportunities come through with that. And so as the AV side of things starts to pick up, we'll see that will drive quite a lot of growth in other regions as well. The other side of things is the return to work and the adoption of what's being called hybrid workflows, which allow offices to have flexible spaces where people can either work in the office or work from home. Requires some investment for these companies, and our products fit exactly in that space. So the hybrid workflow has started to be adopted a bit earlier in the USA than it has in other regions. So we see this actually as a really great opportunity where we've got an early driver that's happening in the USA, and the other markets will pick those up as well. So we've got some great opportunities coming up, but also some really interesting sort of overall business that we're seeing. The other side of things in Europe and the rest of the world still remains constant and solid, which is coming off some extreme growth over the last couple of years. So it's really showing that we have a sustainable base there that we can now push up further with some of our new products. I mentioned a little earlier, we did have some internal COVID-19 impacts, as well as obviously the rest of the world, with some openings and then having to be locked down again. It's the last half of last year was a little turbulent on those side of things. But I think what this shows is our market is really well spread. We've got a great representation in the USA. We've got really strong second runner-up in Europe and the UK, and then the rest of the world coming in at 22% of our overall business. That's a really even spread for a global business, where especially in content creation and media markets, that's exactly where we want to be. So we've got a great mix of geographical presence. Okay, so in terms of overall operational sides of things, this gives you a bit of a view into the products that we sell and the mix that we have. We're really determined to produce what we call workflow solutions for customers. We don't make one box that we sell to as many people as we can. We've got a number of different products that we manufacture, and that includes our converter range of products, our cameras, and then we've got controllers and AV. All of these come together to make a solution for our customers. And you can see there, as far as units sold, we've got really strong presence of both converters and cameras. And on units, the converters typically are a slightly lower average selling price. So you can see there it represents 50% of the units sold, but the cameras themselves actually represent significantly more value for the business. Having a look at each of these categories in terms of PCP growth, you can see strong growth in all of those categories as well. So converters are continuing to grow, which is our mainstay where we started from. Our cameras, which we came out of nowhere effectively in the market 2.5 years ago with cameras, we're still seeing continuous growth in our sales of cameras, and our controllers are really picking up. They allow people to actually interact with our cameras and control their various other devices. And you'll see down the end the monitors and AV. To my point a little earlier, the AV market is just starting to take off, and there's quite a substantial runway with AV where projects need to be specified and designed before they can be deployed. So we're really looking to AV to show really significant growth over the coming quarters and beyond. In terms of product, sorry, Barry, I was just taking a breath there. In terms of product, the release of things like our wall plate and SDM modules really have driven that on the AV side of things. So again, we've got new products across all of our product ranges, which I'll talk in a moment about the growth opportunities, but AV is definitely going to be a driver moving forward. Okay, so this is the bit where I've sort of been teasing a little bit along the way about what opportunities we have and our growth outlook. I couldn't be more excited after this trip that I've had over here in the USA, when I've been talking with our key partners, with our large corporate partnership that we have going with a number of different companies. As I discussed the product roadmap of what's coming out over the next 4 to 6 months, the excitement is almost uncontrollable from our partners. The level of engagement we have and how people are seeing our products, the innovation that we've got coming really gets them extremely excited. So I think the growth is going to be driven from a number of things, which are tabulated here. So inventory build is one that's it's obvious to us, but it's also something that's somewhat unique to us in the fact that we've really solidified the fact that we have supply chain sorted out and we'll have products on sale. Now that means that we can not only continue our product sales, but we can also create opportunities with that by having products that are in market and ready to be bought. The technology alliances, we've got some really good announcements coming up very shortly. In fact, some co-branding and co-working at some upcoming trade shows. And you can see there some of the sizes of the companies that we've been working with, including Sharp NEC on commercial displays. And we're also working with some of the biggest companies in Silicon Valley as well, including Zoom and Google. So looking forward to giving you some more information about what that means as the time's ready, but there's some huge growth opportunities with those partnerships. Another product that's coming out is our infrastructure products. That moves BirdDog right into the core of media production platforms. And that means that we can have a really high-powered product that can really drive a lot of quantity sales. The other thing is that it's a much higher average selling price for infrastructure products. As I've been discussing and demonstrating over the last month with our partners, we really feel confident these infrastructure products are going to be a great and successful product range for us. Including in our software releases coming up is both software as a service and also in-venue software. And we've got some extremely high profile partners that are working with us in getting that to market, and also we'll use it for use cases as well. We're very confident that the software revenues are going to continue to grow and start to add some really meaningful revenue, but also underlying margins to the business. The other thing that I've been working on and the team has is on cost down of designs. As we produce more products, we have economies of scale. As we build more technology, we have new know-how to make it more efficient in terms of design and costs. So improving margins overall is something that we're really pushing. So that's underlying growth in terms of margin. Another thing that's been really exciting over this last couple of weeks is been talking about our roadmap in terms of our innovations that are coming up in our existing products, but also in new products. And that IP development really adds to the value of the business and how we're going to be using our products moving forward. And what's been validated by all of our meetings bar none, is how the direction that we've got with our IP development is really aligned with what the industry wants to do. And we're very much at the front of that curve. So we've got some great opportunities coming up as we release these products, all really due before the end of June this year. Offshore manufacturing, we're still continuing that push to extend our capabilities in manufacturing. That includes offshoring some of our camera manufacturing to Korea and also some of our converter manufacturing to Indonesia. This gives us additional scale, but also allows us access to other markets and shores up potential supply chain issues in the future. If there's any geopolitical issues or things, then we've got multiple places of manufacturing. The last thing, which is extremely important for us, is our regional presence. Something that's really been highlighted to me over the last month is how important it is to have people in the market or in different areas. And our sales engineers and our sales focused people being in front of our partners and being in front of our customers really drives the awareness. Every time we talk about our products, people then want to buy those products. So increasing that regional presence is really high. priority. In terms of outlook, we've got a number of different things. So in a hotel room here, so someone's trying to get in. In terms of our growth outlook, really, I've spoken a lot about this throughout that last slide. We've got some extremely high possibilities. Sorry, I'll start again. We've got some extremely high demand for our current products, which is seeing that extending through to this next half. And we expect to see our products be continuously growing as far as the demand for them. Our roadmap of products and our innovation that's coming will drive new products and additional revenue. And also what's become really apparent over the last couple of weeks is being able to visit our customers face to face has really enhanced our relationships with them and enhanced our plans for partnerships moving forward. So we'll continue to do that with working in other regions as well. I've mentioned a couple of times about products that we have released. So we've got 11 new products that are due before the end of this financial year. All of these products will add, of course, additional revenue to the business. Some of them will take a little bit of runway to get to their full potential, but we're, again, very excited about the outlook of the business in terms of what products we've got. All of our current products in market are growing and are being received well. And then the new products that we've got after talking with our partners really shows that the demand for those is going to be very strong as well.
And importantly, Dan, each of those products that are coming through prior to the end of 30 June 2022 assist in bolstering our gross margin.
Spoken like a good CFO. That's great, Barry. Absolutely. So all of our new products are, as with any new product we have, we're optimizing the way we manufacture it and ensuring that the margins are increasing across the board. This is a product we released just a couple of months ago. It's called Cam Control 3.0. What this has done is really taken our entire product solution in our camera space to be better than what anything else can be on the market. It allows us to gather all of our cameras together. So if you have a production with multiple cameras, you can see them all side by side. It allows the operator to really fine tune those cameras and ensure that they're all matched up and working perfectly, and then they can control it to frame up the shot. But what's even more exciting is we've added in machine learning and AI into this application, which allows our cameras to automatically control themselves. They can lock onto a person and follow that target along or follow that person along. And that means that you can have less people in a production, which is really exciting for socially distanced, but also for lower cost productions. But you can still keep that production value up by having cameras that are following people talking. So Cam Control 3 has been extremely well received by our customers, and it's actually driving meaningful business to the camera line as well. So that's been a really successful release.
So in terms of financial performance, I don't propose to go line by line on this, and I've called out the major things, major items, except for the EBITDA line. So you'll see that the EBITDA, and this is also covered in the Appendix 4D and half-yearly financials, the EBITDA margin headline is 6.4%, adding back that shipment that got held over on New Year's Eve out of Hong Kong. And you'll see the FX loss, which is a book loss of $350,000 for the half, means that our underlying earnings margin was 8.8% of core product sales. So again, slightly different to the 9 to 10% that we were calling out on the 28th of January, but at 8.8% adjusted for that one New Year's Eve shipment. And the FX, the book loss, we're really pleased to hit that almost 9% underlying earnings margin. In terms of balance sheet, this is much more, we've got extensive notes inside the half-year financial report that will talk through the reconciliation of equity, the composition of the inventories. So we've added another $5.25 million of inventory compared to June. So we're now at 16.4. That was called out under the 4C at the end of January. And we've literally more than doubled that from 31 December 2020, which again goes to the de-risking and mitigation of our supply chains. And during the 4C calls, we were talking about deposits and placing deposits with our key manufacturers for up to 12 months. and doing forward orders that get us through till the December 2023 quarter. I think, Jane, at this juncture, we're happy to take questions.
Of course, and we encourage shareholders to use the Q&A function at the bottom of your screen if you do have any questions. There has been a few pop through, so I'll just read them out now. So can you please talk about progress of SDM and the initial take-up?
Yeah, it's a great question. So SDM is a module that we've built in conjunction with Intel, and we're actually going to market as a co-branded or a co-market with Sharp NEC, which are one of the largest commercial display manufacturers. In fact, some of the meetings I've had over here, particularly one in New York City, is looking at rolling out a significant amount of these SDM modules. As far as uptake, I mentioned this in the 4C call as well. Basically, SDM is a corporate AV infrastructure product, which is the idea behind this is it will be specified and sold, in the hundreds, if not thousands at a time for a deployment. So they aren't necessarily a run rate business that will happen immediately upon releasing the product. It has a little runway for it to come up. The great news is all of those conversations with all of the identified deals has been continuous and is ongoing, and we're seeing it getting much, much closer to deployments. So we've got current interest in the product, and we've got growing interest in that product, and it's all heading in the right direction as far as the uptake and delivery of that. And that'll really grow that AV side of the business. It's a higher margin product, and it's also got a great opportunity in terms of volume.
Thank you. Another one's popped up. So can you give any feedback from US customers about product features and what they want to see?
Yeah, so I think, again, it's been back-to-back meetings for the entire month. So we've got a huge amount of feedback from our customers, and overwhelmingly it's been excitement about where our products are and also what's coming up as far as features. In terms of what people are looking for, it's to enable either hybrid production or hybrid AV type workflows. So what we're working on with our upcoming releases is allowing any of our BirdDog products to be anywhere in the world, and you can connect that up using our cloud platform and other technologies as well. So we built up our own method and own IP to send audio and video directly over the public internet, and that's something that's really compelling for customers, and the upcoming releases will have that built directly in.
Thanks, Dan. There's a few questions that are coming through just on the AV side of things, in particular competitors. Do you want to perhaps just give a little bit more color around the competitive landscape?
Sure thing. Yeah. So AV is a large, it's a completely different industry to the broadcast and production space. And there's some very large companies like Crestron, QSys, and other large companies, even Cisco, for example, are in the AV space. What really differentiates BirdDog is a couple of things. One is the NDI standard is an open standard that anyone can install on a piece of software. You can develop software freely. So it means that you can have integration points that are not necessarily a closed shop. With any of these other AV systems, if you install a Crestron system, it all works with only Crestron. So you're effectively buying into an ecosystem entirely. What we've done is kind of skirt around the edges of what's compelling about Crestron in the fact that they have automation, they have the ability to make things happen. When you start up a meeting, the lights go on, or something changes. So we've built in the ability of our products to work in that area. So what we're able to do, and a lot of customers like, is you can have a Crestron or another automation system in an AV space, but then they can use our products to actually do the audio and video. And that allows them to have much more selection as far as having higher quality pictures and not be locked into a single vendor solution, which is really compelling for them.
Barry, there's just a few questions here on the cash flow statement.
Yep.
Do you want to perhaps just provide a little bit more color on the cash receipts?
Sure. Thanks, Jane. So the keen observers will note when they look through the 4D in the financial report that our debtors at 31 December got north of $6 million. What happened was when we went to the market in the pre-IPO and secured 13.75 in the convertible note, the veracity and velocity of customers, our distributors around the world seeking credit terms was ratcheted up. And once the 20th of December happened, the shrillness of that volume increased even further, such that what we decided to do is during December is extend terms to our key and trusted distribution partners around the world, which meant that we extended them terms from literally prepay to 30 days end of month. So you'll see in the next 4C that's due at the end of April that all of those debtors have been receipted, and they've all been receipted on or prior to the 31st of January. So that should explain for everyone, I hope, the decline in receipts in the cash flow vis-a-vis sales.
Thanks for that, Barry. Another one for you, probably, Dan. So can we expect to see any new partnership, customer or product announcements in the short term?
Yes, is the answer to that. So one of the highlights of this trip has been working with partnerships with, again, some of the largest media organisations. For example, a company with quite a colourful logo will be having some announcements at our NAB show, which is in April, about how our products can work with on-ramping into their technology. So we've got some great tie-ups that are happening there. Also, some pretty popular video conferencing platforms are also looking at our technology, and we're partnering up with them to have a presence in our booth at NAB as well, and it'll be the only destination for that. So we've got some really great announcements and close tie-ups with some very big organisations that will really help drive the awareness of the BirdDog brand and really scale that out to be really quite enormous with the access they have to market.
Wonderful. Well, it looks like we've answered all the questions here. I would encourage shareholders, if you do have any further questions, to reach out by the contact details on the bottom of our ASX releases. But otherwise, thank you for joining us today, everyone.
Thanks everyone. We're supercharged about what Fin23 and beyond is going to look like for the business.
Absolutely. Thanks again, everybody. And as Barry said, we're very excited about where the products are going and the uptake that we're seeing and the growth opportunities that we have moving forward and into next year as well.
Wonderful. Thank you, everyone.